What is up, YouTube, and welcome back to another Fridge Financials video. And in today's video, we cover another Tesla stock trading video, but it's not the Fridge Financials trading stocks with Tesla experience. It is the day trader who loses $306 million story. So if you're excited for today's video or curious to know how this Canadian individual lost $306 million trading Tesla stocks, make sure that you smash the thumbs up button, subscribe to the channel if you've already done so, and turn on the bell notifications for all future uploads. Now, not only is the losing $306 million fortune crazy, he's also suing a Canadian bank for misleading financial advice. So there's a lot to this story that we're going to be unpacking here. We're going to do some insights. We're going to look at a couple things and hopefully have a better picture as we read through more and more of this. And I'm going to be following the story. I will be curious to know what happens, because these articles are coming out recently. It's like last week that this came out public. So I'm going to be following along to see what it is that happens as a result. So Carpenter Christopher Duvoc, can't say that name right, from the Soak community of British Columbia, Canada, is among the few day traders who have grown thousands of dollars to hundreds of millions in a short span and then lost it all. Among the few day traders who has grown a huge portion of it and then lost it all. Duvoc started as most traders do, following trading forums and backtesting strategies. So, okay, testing things out, strategies, trying things out. But little did he know that his Canadian $88,000, which is equivalent to $64,760, in late 2019 would grow to $306 million in 2 years. That is an outrageous return in a market like this. He loved trading Tesla stock, options, which is making riskier bets and leveraging and everything else. And despite timing the market correctly, which resulted in monumental returns, he didn't cash out. Soon after, he was compelled to sell all holdings to repay loans from his brokerage margin account, and Duvoc's massive losses led him to file a lawsuit with the Supreme Court of British Columbia in Vancouver. So, breaking it down here a little bit, already jumping right into this. Making money on Tesla stock is definitely not an easy thing to do. Again, I'm someone who had Tesla stock for a little over a year, or almost close to a year, and that stock experiences volatility and goes up and down like it's nothing. These days, at least it does. Again, this is back in 2019, 2020, pandemic eras. People weren't working as much. People were getting stimulus packages. Like that kind of stuff was a whole different situation. But trading Tesla stock already is a risky option. It's already a risky bet. Okay, starting there. Trading Tesla stock is risky. Options is even riskier because options involves leverage and it involves timing and timing the market pretty well because you have a limited time with options trading because you have contracts with expiration dates and everything else. So already a lot of risky things happening here. Trading Tesla stock options, which makes it riskier. And then he also didn't cash out. I can't believe that. And it's very similar on a smaller scale. If you've ever watched the Dogecoin Millionaire, he turned his like $200,000 that he put all in on Doge into like 2.5 million and it didn't cash out. And now it's only worth like maybe a couple 100,000, maybe a little more than that. When I see my portfolio, if my portfolio that I had in my main account, my investment account that I have, which is about like 50,000 right now, give or take, at the time of recording this video, and I see it jump up to even like 250,000, 300,000, like just in like a gains of some sort of trade, like I'm cashing that out quick. The fact that he was letting things ride over and over again for millions of dollars, not just millions, hundreds of millions of dollars in the market and wasn't cashing out is just mind-blowing to me. I would freak out if I saw 300 million. I would freak out if I saw 2 million in my account. And this guy had 306 million. Absolutely insane. And now he's filing a lawsuit at the Supreme Court of British Columbia in Vancouver. So we're going to talk more about what it is and what happened. So according to the legal filing, RBC Dominion Securities, RBC Wealth Management, I think RBC is Royal Bank of Canada, if I'm not mistaken, but these are like little like branches within it, financial services, and Grant Thornton violated contracts by offering inadequate advice that cost him his entire wealth. Okay. The lawsuit alleged that RBC considered Duvoc a sophisticated trader given his options trading win rate. So when you apply for options trading and you look at, those kind of things, they don't just open up options trading, like sophisticated options trading to everybody. You have to go through a process. You got to file for it online through your brokerage app. You apply for it, and they either deny you or they accept you. And it's based on what your risk tolerance is and what it is that you know and your education a little bit. So not just anybody can do options trading, but I guess when you're looking at talking to financial advisors, they're looking at his options trading win rate, and they're like, okay, this guy knows what he's talking about. However, RBC didn't acknowledge the fact that his knowledge of investing more generally, of financial planning, and of tax was in fact limited. So first of all, this guy's a carpenter, right? And obviously he's really good with, I'm going to assume, really good numbers, calculations, these kind of different things, because that's what you're doing. Your measurements, you're doing, angle measurements, you're cutting pieces of wood, those kind of things, you're building things. You need a lot of math involved with that. So that makes a lot of sense. But the fact that they say that he didn't acknowledge, that these people didn't acknowledge his knowledge of investing, just in general, like how investing works, financial planning, which is getting ready for retirement, and of the tax laws and tax rules and everything else, was in fact limited. So he had a lot of education and knowledge in the trading space, but not a lot in the overall financial field. But they didn't acknowledge that. The filing highlighted that Devocht, I'm going to guess his name is Devocht at this point, I don't even know, was a small part-time trader. Oh, small part-time trader. Yeah, I mean, he's trading with like $80,000, whatever it was, with mostly Tesla stocks and derivatives at the end of 2019. Eventually, he invested all of his savings and gains. His portfolio value surged in months. He had amassed 5.5 million Canadian dollars by early 2020, and at the age of 30, and by June, his portfolio was worth $26 million. And if you take a look, I believe it was 2020 to 2021, the Tesla stock. So here's July 2020 down here, and then here's November 2021. It was up over 400% in the timing of these, when these articles came out showing about how much money he was making. He made over 400%. This is just in the stock. Options obviously gives you more leverage. So a 400% return in the stock market is a lot more money in options because you have more leverage, you have more ownership without buying the actual shares themselves. So it was a crazy return that this guy had. And he got it, and again, he timed the market very, very well, because if you take a look and you zoom out here, so here's your pandemic era somewhere for Tesla stock. Again, pandemic era was like back over here somewhere. And then you get Tesla on this huge increase up here, because what it was is that people were staying at home. They were trying to find ways to make money because they were being laid off. Things were closing down temporarily because of the pandemic and stuff like that. A lot of money was being pumped in with stimulus checks and everything else. So the market had a crazy rally after this like little bit of a break period in the quote unquote recessionary period right here, when everything started shutting down in 2020. Market had a huge turn of events, and that's where we're at right now. So he made some crazy returns. Now, apart from claiming significant respiratory health issues and a limited understanding of financial complexities, so again, not understanding a lot of things in the financial field, Devocht also stressed how he approached RBC for a loan in 2020 to move out of a rental apartment and to buy a home. His inquiry at RBC Private Banking on securing a loan against equity holdings translated to an agreement between Devocht and RBC for financial advisory services. So I'm guessing instead of pulling the money out of his brokerage account and then using that money to then just buy a house either in cash or whatever it was, I guess he went to this bank and said, you know what, I want to keep my investments in my accounts, keep growing those, but I want to get a loan that goes against that as my equity. So if I can't pay back the loan, my equity is my collateral. So his ownership in those stocks and in those options was his collateral in case he couldn't pay his loan back on time to the banks and everything else. It's just like what major CEOs will do. Like you could look at like Elon Musk, Mark Zuckerberg, whatever the case is. I know Elon Musk is one of the ones that was known for doing it, especially when he acquired Twitter years ago. They use their shareholdings, they use their stocks as a collateral when they take out a loan. So they don't ever actually sell their positions. They keep their positions, but they take out a loan that has collateral of the shares they actually have. So if they can't pay back their loan, their shares go up for collateral to then be taken back to pay off the loan. That's what it sounds like is happening here, is that he's just saying, I have $26 million or whatever $1 million in equity in my brokerage account. Here's the proof of it, my proof of my investments. And I want to get a loan out to buy a house instead. And the bank says, okay, if you can't pay the loan back, then we're going to be taking your shares as collateral and everything else. An accountant at Grant Thornton also helped him navigate financial tax planning. However, the complaint noted that RBC advisors didn't understand or encourage Devote's desire to essentially retire by offloading Tesla options to invest in secure instruments for passive income. That was a mouthful. The complaint noted that they didn't understand or encourage his desire to essentially retire by offloading Tesla options. Basically, according to this lawsuit, he's saying that they didn't acknowledge that he wanted to retire and have passive income. And let me tell you, I did the math, and I pulled up a calculator and everything else to do the math for us here, right? So at one point, he was looking at like hundreds and billions of dollars, essentially, right? So yeah, he went to like, I think it was like 400 million Canadian, which is like $307 million in the U.S. equivalency, in the U.S. dollar. So as you might have known recently, I'm someone that's going to be trading the SPY ETF. Again, SPY is the one that invests in the entire U.S. economy, basically the top 500 stocks that are built in the U.S. And if this goes to zero, then we're in trouble, obviously. So to have it be worth, I think it was like $350 million, he would need, and let me just make sure I get these numbers right here for everybody here. Let me see what this comes out to be. Yes, this is about 400 million. I mean, this is an estimate. I mean, if he had 600,000 shares of SPY, even at the all-time high, which is just hard to believe, that's 350 million of equity right there. If he took that 400 million, that 300 million, sold it, put it into the S&P 500. You don't even need a financial advisor for that. I don't use one. I just know that this is the tracking the overall market, returns 10% a year. It's really, really good. If he just did that and took that money out and put it into the S&P 500, I know it's like, oh, that's not a lot of money. His annual dividend income, which basically is what you get paid out just for owning the shares of S&P 500, is $9 million. That's just in dividends. He wouldn't even need to touch the principal balance. But just in dividends alone, he's making $9 million a year. Just by getting the dividends taken out. You don't need an advisor. You don't need to go ahead and try to figure out what can I do with this, what can I do with that. I would just be like, yep, taking that money, buying 600,000 shares of S&P 500, boom, 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 $9 million income. Okay, I'm set for life. You can retire at 30 with $9 million a year. And if you can't, then I don't know what to tell you. And that's not even taking out from the principal balance that you have. That's just the dividends they pay you out over and over again. But even in 20 years, when he was 50, he would have almost $1 billion. He'd be at $766 million in 20 years. I don't understand. I wouldn't be doing that. That's my 2 cents. I would not be someone that would be doing that. But, to each their own, I guess, right? In contrast, advisors recommended that he establish a company and roll securities into it. They asked him to execute trades within the newly formed company and hold as much Tesla stock as possible. And people always say all the time, people all look really good. People look like they're expert traders in a bull market. In a bull market, everybody looks great. Oh, I made 300% in Tesla this year. Oh, I made 100% in NVIDIA this year. Okay. If you were still holding up here, you're down a crap ton of percent. You're down a lot. Everybody looks good in the bull market. The real traders come out in the bear market and still make money. That's the difference between traders. Okay, you all make money in the bull market. It's not anything crazy. But the fact that they're supposedly telling him to trade as much stock as possible for Tesla is crazy because of how risky of a company Tesla is. This strategy would supposedly help Devote avoid high taxes by convincing the Canadian tax authorities that the legal entity is an investment holding company and isn't engaged in active trading. Basically, opening up a company in his name and trading under that name is going to be a tax incentive and be able to save him money on taxes because, again, when he sells these shares, when he takes these profits and he takes these capital gains, you got to pay taxes on them. So having it as a company would make it a little bit better, obviously. Furthermore, the lawsuit claims Defoe was also advised to donate to the RBC Charitable Gift Fund for charitable tax credits given over $8 million in 2020 and $17 million a year later. So giving $25 million to this charitable gift fund. The reason why is because when you do charitable gifts and you donate money to charity, that is also a tax write-off. So they're thinking of, okay, how can we maximize tax incentives here? A, trading under a company in your name instead, and B, donating to charities to then do tax write-offs as well. That's what their logic was. RBC offered a margin account that allowed Devon to borrow money for trading. If you don't know what a margin account is, basically, it allows you to have access equity or it allows you to have an abundance of access to more money than you actually have. It's basically a loan, but like a risky loan. And what'll happen is, say I have $10,000, I can apply for margin and get like maybe another $10,000. So I basically could have $20,000 of money, but I have a risk of losing that $10,000 in terms of if the stocks go down, if I lose money and stuff like that. So margin accounts are risky because you're basically taking a loan out through your brokerage account to then have more access to funds. The thing is, if your portfolio doesn't perform well, the bank comes knocking on your door and says, we need our money back. You're not doing well. It's called a margin call. If you want to look it up. It's called a margin call. It's very interesting. He used it and grew his portfolio to $286 million by April 2021. Within 8 months, it doubled to over $415 million. And so here's my first argument now, and think about this. So he's taken his portfolio under these investment companies and firms, and he's grown it from even to 186 to 415 in April of 2021. So that's like this rise up over here. He's growing it right over here. So he's probably loving this investment company right now. He's like, dude, you just made me over $200 million in Canadian dollars here. They probably love it. However, investing in securities of the company designed to trade the Tesla stock primarily led to extreme concentration, basically not diversified. If all your money's in one thing, that's a problem. In 2022, Tesla shares experienced massive fluctuations and declines that compelled the largest holding company to offload shares to repay the margin account loans, aka margin called, because that's what happens when you go on margin. Margin is not like an easy thing to do, and you can get margin called, but not a good idea. 2022, look at that sell-off. Not it, Chief. Not if. It's funny because he probably wasn't complaining here. He wasn't complaining at all. He was loving who he was working with. And then it's like, oh, I'm losing money now? Oh, now I'm going to complain. Okay, sure, man. In time, the plaintiff's security holdings were worth nothing. But for the defendant's inadequate advice, the plaintiffs would have preserved a substantial portion of their wealth and implemented financial planning that would have resulted in the loss of their entire net worth. Then, although he attempted to recoup losses by borrowing $20 million from the corporation to make short-term trades, that approach did not work. Despite multiple efforts, securities held in the holding company were worth nothing. The complaint also raised concerns about how RBC suggested to make over $25 million in donations, significantly depleted much of his wealth. While Devon is seeking compensation for general damages due to contract breaches and negligence of duties, none of the allegations have been proven yet in court. And that's the interesting thing that I want to follow this along with. I would love to know when they provide proof and evidence to the courts in this lawsuit. Because the way I'm looking at this is you're talking to a financial advisor, okay, who they sit down with you, they talk about, what's your risk tolerance, what's this, what's that. There's been no formal proof yet given to the courts. There's been no gains, no losses reported, but again, their approach did a phenomenal job. They took $186 million in 8 months to 415, almost 3xing his portfolio. It doubled. Okay, it doubled his portfolio in 8 months. That's very, very possible to do. Majority, even top hedge funds cannot double a portfolio in 8 months. And they did that. But again, this brings me back to the idea of investing versus gambling in the stock market. This right here is screaming gambling. He wants that dopamine hit. He wants all those different things. He wants that extra money for it. And maybe the bank is responsible for doing it too and helping fuel the fire. Maybe it is. But again, there's no proof yet that goes about this. But it's just, he went on margin, he took out loans, he traded options. These are all very, very risky things to do. And if you don't have your management under control personally, that's what leads to you saying, oh, I'm hitting it big. I lost it all. Let me try to get it back. I'm trying to get it back. And then he didn't. And then he even took out another $20 million to recuperate his losses. Like, that's absolutely wild. So I'm going to be very curious to see what happens with this lawsuit. Again, they're saying one thing, nobody's saying anything yet. There's been no proof given to the courts yet as a result. So it'll be very interesting to know. So thank you so much for watching today's video. Again, this guy lost $306 million. And now he's suing for financial fraud, basically, on this one. So that'll be curious to see what's going on here. So thank you so much for watching today's video, as per usual. If you made this fun the video and you're not subscribed, feel free to subscribe to the channel, as per usual. I hope you guys are making money in the market, like I always say. And I hope you're not losing a $306 million fortune like this Tesla day trader did right here. So thank you guys so much, and I will see you guys, as always, in the next video.